Let's look at another aspect of the environment specifically mentioned on our syllabus. Specifically mentioned on our syllabus. What is that? It's the expression called Environmental Management Accounting, or IMA. IMA. So what is IMA? When I talk to students about IMA, I normally say, maybe we must start with management accounting alone. What do you think? Instead of adding IMA or the E, let's start with management accounting. What do you know about management accounting? What is involved in management accounting? Well, from our basic studies, we know that this is a branch of accounting which focuses on providing information for the internal management team. The focus is on the internal management team. And we normally say the internal management, the people who are entrusted with the management of an organization, have critical decisions to make. They need information that can support them. They need information that can support them in planning. So our management needs information that can support them in the planning. That can support them in decision making. That can support them with control. So a management accountant or management accounting area focuses on providing or supporting internal management teams with this sort of information. Now, when we add the word environmental, what perspective does the word environmental bring? What perspective does the word environmental bring? Let's look at the perspective that it brings as we look at our definition. The generation and analysis of both financial and non-financial information. So this is a function which is responsible for the generation and analysis of both financial and non-financial information in order to support internal environmental management processes. You see the point there? To support internal environmental management processes. Wherever you are, the environment, the issue of the environment, the way in which an organization is interacting with the environment is something that has become critical. So, part of our performance is in relation to how are we dealing with the environmental issues. There are regulators, there's compliance issues. So a management team must respond to all these. Who's going to support them with this information? Who's going to support them with this information? That is where we come in as management accountants and environmental management accountants to look at what type of financial and non-financial information does management need in the environment, internal environment management processes. So the question is, are we saying that traditionally we have done nothing? The traditional management accounting has not helped? Is that what we are saying? Or what has been the shortfalls of the traditional management accounting approach? Number one, it underestimates the cost of poor environmental behavior. It does not come out. There's an understatement of the costs. And equally, there's an underestimation of the benefits of improvements that can come from improved environmental management or environmental behavior. It distorts and misrepresents environmental issues. I mean, things such as the transport. If you report your transport costs, it looks like it's just a cost, but it may be an environmental cost. What of your energy costs? What of the cleanup costs? So we don't highlight these as environmental issues. And time and again, what is supposed to be reported separately as environmental costs? What is supposed to be reported as environmental costs is just lumped or is just or put in general overheads. It's for this reason that there's now this emphasis on EMA. So what is the effect of all this? What's the effect of all this? Poor management decisions. Managers then who are running businesses are unaware of these costs, have no information with which to manage them, and no incentive to reduce them. That's the effect of traditional reporting. Now, what does EMA intends to do? What difference does EMA make? EMA attempts to make all relevant, significant costs visible so that they can be considered in business decision making. And therefore, you use the environmental activity-based costing, life cycle costing, and also the input-output analysis. Input-output analysis. These are 3 techniques that are mentioned on your course. For the purpose of, and this information helps us in product pricing, it helps us when preparing budgets, it helps us when we're doing investment appraisal, and when we're setting targets. And these are very important management issues. These are very important management issues. Okay, so somebody has put a nice question. I like this group, I like the interaction. Somebody says, Mr. Piri, please can you talk about input-output analysis? That's okay. I'll check in my archives and bring out something quickly which we can discuss. I'll check my archives shortly. In environmental ABC, we know what ABC is all about. ABC is about identifying activities. And identifying cost drivers within the activities. This is at the center. We need to identify the activities. So in an environmental activity-based costing, we identify or formulate activities into which we accumulate all the environmental costs. We find the cost drivers, and then we are able to incorporate all such costs into cost objects, such as the products or product pricing. We understand life cycle costing, that this is a costing technique which we use at a planning tool, at a planning stage of an organization. We use life cycle costing to estimate the cost of the product all the way. So life cycle costing is a very powerful planning tool, which we use to estimate all the costs of the product from the design stage all the way to redundancy, or when the product is removed from the market. And by doing this, we're able to foresee in advance whether this product is worthwhile or not. So we plan for the full life of the product. What of environmental life cycle costing? In a similar way, in environmental life cycle costing, we are accumulating the environmental costs not only after production, but all the way. So we accumulate, we assess the life cycle costs across the whole life of the product. And then we are able to see whether we should go ahead with this product or not. The input-output analysis, what is it all about? Back to your cost accounting. Process costing. Process costing, we've got inputs. And these inputs, then you've got outputs. So if we are the 1,000 liters of a chemical that you are producing, that you are processing, how much comes out? How much comes out? So what is it that has come out as good output? So if good output is 950, what of the 50 liters? Where have they gone? You want to answer the question, where are these 50 liters? These 50 liters could represent a waste, or what we have thrown to the environment. You know, when I think about this input-output analysis, depending on your environment, there are certain things that we observe. There are certain things that we observe in lots of processes, which can give us an idea of input-output analysis. Have you seen the carpenters? I'm sure in your environment you have seen carpenters. And some of you have given a carpenter a job to do for you. You give them so much timber. You give them so much timber. You notice how much timber we give them to do a job for us. You give them 100 tons of timber. But the product that they make for you, you find that it's only 80 tons. Where did the 20 go? That's the essence of input-output analysis. The other ones that I observe a lot in my market here where I am are tilers. People do tiling, whether it's residential or it's for offices. You buy so much boxes or square meters of tiles, but look at the floor area which they cover. So you find you have bought 1,000 square meter, but what they're going to do probably is just 800. You've got all these 200, they call offcuts. Where do these go? This sort of analysis of input output helps you to understand the level of waste or what we dump on the environment. Now, this information can help you because, like here, we have said that the benefits of improvements. Look at this. This wastage is too high. If you buy 1,000 and the floor area done is only 800, where are these 200 gone? Can we improve on this? Can we improve on this? So this knowledge will help us do what? To improve. Maybe our people require training. What do you think? We need to retrain them. We need to retrain them. So this is what we call input-output analysis. Okay. Good. Let us make a move. Now we're going to make a move to risk and uncertainty. We're going to make a move to risk and uncertainty. So we are done with that. Now let's come to risk and uncertainty. Risk and uncertainty. So now I'm going to present a full discussion. I'll share slides on risk and uncertainty. And then we'll also be looking at a question on the concept of risk and the uncertainty. Okay. So that's what we are going to do.